Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from my hometown of Calgary, Alberta. Welcome back to the show, Josef.
Oh, my pleasure. Good to be with you again, Jim.
Josef, you have your Black Gold webinar tonight. Can you tell us about it?
Yeah, what we do is every quarter we do a webinar with our subscribers, and the goal there is to cover, of course, questions that they send in to us, but every once in a while there's a major thematic. And since the one we did in March of Q1, which was the major thematic at that time, which was the buy signal that we got, and we sent out an action alert buy. So it was good to then go over all the stocks at the time. Things like Tourmaline were trading at $7. The TSX Energy Index was trading around 38. It's now 112 or so for the index, and things like Tourmaline have tripled. We've had stocks gone up in as many as 5 and 6 times. Quite a few of those, and then we had one stock that went up over 10 times. So we now said in January we had 2 sell signals. So January 14th we sent out the first sell signal. On February 5th we sent out the second sell signal for the energy sector, and we said take profits on days of strength. And we had at one point 24 names on our recommended action buy list, and we've shrunk that now down to about 6 names. So we think that the sector is now ready for a significant correction, and we think that's probably going to be starting. So tonight's webinar, we're going to go over both the market stuff and then the individual companies and how we see where the next levels for buying is. And we're also going to go through how to make a decision for investing in energy and how to create portfolios for yourself, depending if you're a conservative investor, a growth investor, or a entrepreneurial, more speculative investor. So that's going to happen at 7 o'clock tonight. So anyone who is not a subscriber right now can sign up and become a subscriber. We have a quarterly subscription alternative and an annual one. If you remember, we did a special a while ago through House Street Radio. If not, if you can't sign up today and you still want access, we put it in our archives within a day or two, so people can go to the website, sign in, and then find out and look at it, and our full presentation, which will be 2 hours potentially tonight on the archives. So it's a good way for people who are very involved in the energy sector to get an understanding of my view of why I think there's going to be a severe correction, go over the bull market that we had from the beginning of March. We're now going to have a severe correction, but it's not going to go down as low as we saw in March of 2020. But when we get this next buy signal in April or May, it'll be time to load up again and to take advantage of bargains. And we think that a 4 or 5 year potential bull market is going to come going forward, and that while the price of crude at 62, 63 may back off below 50, we think that sometime in 2020 2022 we'll be looking at consistent $70 US per barrel, and then 2024, 25, maybe even $100 a barrel, which means there's potential for making 5-10 times your money on individual stocks, and the index potentially could triple from here. So we think there's a lot of opportunity, but people should be patient and wait for the next buy signal, and we'll do that tonight and explain everything in our webinar tonight.
Yeah, you're saying a big correction coming up. I don't want to steal any thunder from the webinar, but any idea how big of a correction?
Well, in terms of the Dow, I think, today we're seeing the Dow down, 500 points. And I think this is Thursday the 25th, and the high was about 32,000. I think we're going down to 24,000. So we're looking at, a 20-25% kind of decline over a couple of months. And if you remember, last year we peaked in February and bottomed in mid-March. So it can be quicker or it can be as long. If you remember in 2008, 2009, we peaked at the end of Q2 in June, and we didn't really bottom until March of 2009. So the markets can correct for 2 to 3 months, and when markets go down, they go down a lot faster and with a lot more violence than the up move was. And so we think that when this thing starts showing its top, and the breakdown would be a Dow breach of 29,900, and when that happens, I think that's going to set the stage for the decline very quickly, like the waterfall that we saw in March of last year, taking us down to the 24,000 level. And I think there's a number of reasons for it. One, we're seeing rising interest rates right now. The Fed, is talking a good story, but the bottom line is they're only going to buy $120 billion of government paper and $40 billion a month of mortgage-backed securities. And the problem you've got is a $3-4 trillion deficit. And then you've got, and then if they do the COVID-19 package, there's another $1.9 trillion. And then on top of that, you have renewals. So the Fed is not going to be able to paper over all of the money that's needed, which means it's going to have to come from you and me and from investors, pension funds. And with the inflation picking up, as we're seeing from the commodity board, and if there is an increase in the minimum wage from the 7s to 10 or 11, forget about even the 15, which is unlikely to get any Republican support. Even if it goes to 10, that's definitely inflationary, and that's going to, cause interest rates to go maybe on the 10-year from 140, 150, where we are intraday today, probably to 2.5%. Well, if you add another 100 basis points, then that means the discount factor on stocks goes down, and that's why we're seeing the NASDAQ names go down. Yesterday, for example, when we had a significant strong up day on Wednesday, we had Apple down on the day, and Apple's down 3% today, 374 to 121.61. So the leading stocks that took this market up to the all-time highs were the FANGs and the Momentum and the Internet at Home names. They're now leading the way downward, and I think we're going to see much lower levels.
We'll have more with Josef Schachter right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome back. We're speaking with Josef Schachter. Josef, electric vehicles, are they going to have much of an impact on the oil market in the short to medium term?
No, I don't think so. I think that what we're looking at with EVs is right now they're probably 2 to 3% of world vehicles. China's, of course, the biggest market, maybe 7% of the vehicles on the road. The two issues for EVs is one, the ability to charge the car faster, so that it's not a 6, 7, 8 hour overnight kind of thing. And the next thing is the range of the batteries, and that the batteries can take you from 300 miles to 400 or 500 miles, so that some distance is there. And then, of course, we need a lot more charging stations all around North America. So to me, the 2030 goal of many more, potentially 10% of the fleet, and then you've seen GM say by 2035 they'll all be an electric fleet. There's going to be a lot of technology that it's going to have to be resolved, and a lot of capex to build this, this charging system and the rest of it. And the EVs are going to, definitely displace maybe intra-city demand. But I think for long distance highway driving, holiday driving, we're still going to be driving fossil fuels. California said that after a certain period of time, I think it's 2035, you won't be able to buy a new fossil fuel car, but you can still keep the ones you own. So I think that we're looking at less maybe energy demand in North America and maybe the OECD countries, but China, India, developing South America, developing countries in Africa, the populations there are so much bigger, India, China, that we're going to see demand growth overall. So let's say worldwide demand now is 94 because of the pandemic. In January of 2020, it was 101. I think we're looking at 2, 3, 4 years from now, demand, even if EVs take off to the degree everybody hopes, that we're going to see demand of 103 to 104 million barrels a day. So the energy industry is still going to have a client base, but the issue is going to be that it's going to be not in North America. And so for the companies in North America, they're going to have to take a view that because of environmental ESG issues, because Biden wants to, get rid of fossil fuels, wants to get rid of coal, wants to, the pipeline, the XL's been canceled. The battle of Line 3, Line 5 for Enbridge is underway, and there could be some problems there. The North Dakota Access Pipeline. So there's a lot of anti-energy industry. But and then of course you saw this morning, I think ExxonMobil took a major write-down of all of their shale assets in Canada and around the world. So we're looking at a situation where the energy industry, if it's not natural gas and it's not lighter oils, the heavier oil barrel companies are going to have to take an approach like the tobacco companies and say, we're in a declining industry, demand's not going to grow, why don't we become as cost efficient as possible and then take the excess cash flow, pay down debt, have free funds flow, pay down debt, and after we've done that, shareholder returns, massive stock buybacks, and increasing dividends. And we saw that happen with a number of the tobacco companies, and in some ways the ExxonMobils are rejecting that view, but other energy companies are now saying that is their view.
We'll have more with Josef Schachter right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Joseph, does Canada have to do more to promote the international growth of LNG because Asia loves natural gas because it's so much cleaner than coal?
Yeah, if we want the world, the planet to benefit, we have to get rid of coal, and 50% of the electricity produced in China is coal-related. Even in countries like Europe, where Poland is behind the eight ball, a large number of jobs are there, especially in eastern Poland, so they have to incentivize people to go find jobs for these people, and then they're planning to do it over 20 years, I think, so that, the demographics, mean that there's a smaller workforce that stays in it, and the younger people get trained in new technologies and new job opportunities. But I think that the big benefit, of course, is going to be renewable jobs are going to be in big demand. So to build solar panels, to install them, winterizing. I think we all know now that the wind power is not something that works as well in Arctic environments, or cold environments, so they need to be specially insulated. So there's going to be a lot of, jobs for people, and government's going to focus on those jobs. And people who are involved in the old industries, for example, the heavy oil industry, coal industry, are going to need retraining. And since a lot of people, let's say, are 50 or 60, are probably set in their ways, it's going to be a period for them to wait for their pensions and kind of stay working. But for all the young people, they're going to want to move them into these new emerging and opportunistic, high-paying jobs for the future.
Alberta has mentioned using natural gas to produce hydrogen. Is that efficient, and or is the federal government doing its best to discourage that?
I don't know enough about the hydrogen demand. I'm seeing a lot of commentary about companies wanting to spend, and again, technology breakthroughs can make it worth it. But at the current pricing environment, the hydrogen batteries are going to be needed for larger long-distance trucks type of things and buses. Ballard, of course, is a leader in that side. But for you and me to be driving hydrogen-powered cars, I think is totally loony. I don't see that happening at all. I think the EV world is for us. But remember, natural gas is going to be needed to create that electric power for us to charge our vehicle up. If the clean is burning, there's also potential that nuclear, especially some of the new nuclear factories that can be built from nuclear power plants. So there are alternatives to the fossil fuel. And of course, we're going to be working on methane issues as well as the CO2 issues. There'll be taxes on them. We're waiting for the Supreme Court of Canada to resolve, the provincial federal jurisdiction on it. So there's a lot of issues related to it. But not only is it the concept of resolving these climate change issues and the economic cost of it, it's the technological breakthroughs that are going to be needed. So we're going to have to spend a lot of money and research to find out how we can make these new technologies cost efficient without subsidies.
Joseph, anything you wanted to add to today's show?
Yeah, I think, if people are overly invested in the market right now, definitely don't use margin. Make sure you have some cash and lower your exposure to the markets. I think the downside is significant. And if you want to see my views, please join our webinar. You can go to www.schachterenergyreport.ca. And they can find the access to our subscriptions, and we have both a quarterly rate and an annual rate. So if you want to try it, try the quarterly, and then see what we're thinking. And then if you're involved in energy, then you probably want to not only stay for the macro research, but also for the ideas that we come up with on the energy side.
And that starts at 7:00 tonight, Mountain Time.
Correct, sir.
What color of bow tie are you wearing?
Tonight, it will probably be an Alberta rose tie.
Beautiful.
Wild rose tie.
Joseph, thank you for being on the show.
My pleasure as always. Take care, Jim.
My guest has been Josef Schachter, founder of the Schachter Energy Report online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Joseph or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.